Hey, how are ya? Greetings, everyone. I hope you guys had a wonderful Thanksgiving. It was Thanksgiving was just a few days ago, so hope you guys enjoyed it with the fam. So, this is my first video, right? I want to create a channel, basically just documenting my investing process, and my hopes is that people like yourselves enjoy it and they want to start implementing a similar idea, or maybe it's the same exact idea, into their own lives. And hopefully, the end goal is to retire semi early and buy back our time and enjoy life, right? So, a little bit about me. My name's Christian. Ooh, sorry. My name's Christian. I'm 25. I am self employed and I want to help people. Um, so, what really kind of started me on this journey was a few years ago, and I kept hearing this thing come up. It was, be your own bank. And so I started doing some research about it. People were saying to use a property that you already own and do like HELOC loans, or you could get whole life insurance. And the whole idea was you buy an asset, you borrow against it and then use that money as a loan to buy more assets to produce more cash flow, and then so on and so on. So I was like, okay, well, I don't have, at the time, a lot of money. Oh, I still really don't. But I didn't at the time, and so I was just trying to like figure out like how can I at this time I was, I don't know, maybe like 21 or 22. How can I do like a similar kind of thing? So I studied money and what whales or big money do with their money. So banks, financial institutions, or like big companies, what do they do with their money? And basically, like they all have one common theme. And I also, uh, the book Rich Dad Poor Dad really helped me with this mindset shift. And it was all one common theme. It was that the rich and big money, they don't work for money. They take their money that they earn, they buy assets with it, and then those assets produce cash flow, and it's enough cash flow to then cover their liabilities or like living expenses, things like that. So I was like, okay, I'm young, I don't have much money. How can I implement something similar? So I did a lot of research. I came across two things that really stood out to me. One was Bitcoin miners. And the thing with that was I'm not good with computers, so I could buy it, I could set it up. It was confusing, but I could figure it out. But if something was to happen, like breaks, like if something breaks with it, I have no idea how to fix it. So, and then the other thing with that was where I'm located, the electric is like really expensive over here. So I would probably just break even or maybe lose money, right? Especially if Bitcoin was in a bearish market. So I was like, I don't know. So I looked into these covered call funds with stocks, these covered call ETFs, and I I did a lot of research about them. It's like that thing where it's like too good to be true. Um, and but you know I experimented with some companies and certain funds, and I didn't like those. But these that I've had in my portfolio for the last few months, since like April, maybe a little bit before, I like them. They've held up really well. So I definitely see some potential with these, and my hopes is to, be my own bank, right? Use the money that I get from my job or whatever to buy these assets, and then those assets produce enough cash flow over time to pay for my liabilities, my living expenses, if it's rent or my mortgage, whatever, car loan, whatever, right? So that's the goal in the next 5 to 10 years, and then after that, just to produce enough to change to help like my kids and their kids and all that stuff. So generational wealth, right? Okay. So the money that comes in, right? There's two different kind of like buckets that I invest in. So growth ETFs and then income ETFs are the two that I like. Um, Now, with growth ETFs, I have two holdings, right? The first one is BTGD, which is 100% Bitcoin exposure, and then 100% gold exposure. Um, and then my second one is AOTG, which is it's an ETF that has AI tech and innovation stocks inside of it. So the reasons for why I like these is AI and tech is where the world is headed. Like we're in 2025, almost 2026. Um, a lot of millionaires, billionaires, and people in hedge funds and stuff, they are saying like AI and tech is the way to go, right? Back in like the 1930s, the thing to get into was like utilities, right? Like steel, electricity, oil. I mean, oil's still like pretty solid, but things where like the US was really starting to like build up, so like anything in that field was going to be good, right? And then in the 90s, early 2000s, the thing was like anything with the internet. Sure, anything internet wise is probably like a solid investment, but now we're in 2025, almost 2026. Like there are huge things going on with AI and like in the tech industry as a whole, right? So, you know, I definitely see in the next 5 to 10 years where we could be. Like, I think right now, I think we've only kind of like just broken the surface, right? I think there's still like a whole, you know, a lot more things that AI and stuff can do. Like I don't even know. Like it's crazy how much we've improved just in the last couple years. So just imagine like okay, where have we came just in the last 5 years since COVID really? Like okay, imagine another 5 to 10 years from now, right? So I think there's huge potential there. And then so BTGD, I like that because it's Bitcoin and gold. I mean, gold is God's money, right? It's always been around. It will always continue to be here, and it will always continue to appreciate in value. And Bitcoin, because people are saying it's the new age gold. If it's true or not, I don't know. Or will it be true or not? I couldn't tell you. But regardless of that, we are seeing countries, companies, and other financial institutions, big banks and stuff, that are starting to adopt Bitcoin and then like also cryptocurrencies. Um, so I also just like AI and tech, I think Bitcoin, crypto, gold, I think there's huge potential in the next 10, 20 years as well. So let's take advantage of it, right? So those were my growth funds that I have. My income funds are right here. So I have three funds from Round Hill. My first one is XCTE. It has a 20% yield and it gives exposure to the S&P 500. I have QDTE, which has a 30% yield and then gives exposure to the NASDAQ. And then YBTC, which has a 40% yield and exposure to Bitcoin. Right now, I don't have much in YBTC. I don't like single stocks as much, and YBTC tracks Bitcoin or exposure to Bitcoin, not tracks it, gets exposure to it, right? But we're I'm recording this on November 30th. So right about now, Bitcoin's down right around like 88,000, I think. At least the last time I checked. So I think we're going to see a pretty nice bull market end of 2025, maybe beginning of 2026. So, whenever Bitcoin, I don't plan on holding the YBTC fund long term, but I think we're gonna see like a nice move with Bitcoin soon. So I want to take advantage of that, and then also, get some weekly income with it, right? So all of these they pay every Friday, right? And they are consistent. I've been keeping track of their payouts, their yields, and all that. I mean, like they do fluctuate, but XDTE, I don't think I've seen it drop below a 20%. If it has, maybe it was like one time, but typically it stays between like a 20 and like a 25% yield. QDTE stays between like a 30 and a 35%. And then YBTC, I haven't held this one long enough yet, but it's staying around like a 42%, which is pretty nice. And again, I don't have much money in that fund yet, but um, you know, so um, so this is kind of how I split up my money. So we'll just use this example. Let's just say I have $1,000 ready to invest. I would take about 80% of it, or $800, and put it into my income funds, and then about 20% or $200 into my growth fund. So because I'm self-employed, I don't have taxes taken out, every paycheck or whatever. So at the end of the year, I have a huge tax bill. So what I want to do is um, kind of like prepare for it. So whatever I make from my paychecks, then I'll just take 30% of that and put it into that fund. And at the end of the year, whenever tax time comes around and January or whatever, then I just, all right, there's my taxes. So it's kind of like I just kind of like set it aside, which is nice. This will be like the first year that I'm actually going to do it, because this is the first year that I've been investing in these funds and stuff. So I'll put about 30% into XDTE, and then 35% in QDTE. 10, 15 in YBTC, and then in my growth funds, I'll kind of split that 10 and 10. And also, because XCT and then QDT are my biggest holdings, I will apply 30-day or maybe even 60-day, but so far it's just been 30-day put options to those two holdings. What this does is, in case of a market downturn or a bearish market, if we get one, um, as my portfolio value is going down, my put options will kick in at a certain price. And as my portfolio is going down, my put options were going up. So it's going to be like a hedge against my portfolio to minimize downside risk. And it just acts very similar to like car insurance or even home insurance. For car insurance, um, you pay a certain amount every month. And if you don't get an accident, if nothing happens to your car, great. Okay, then you just pay them again and again, and it's a small fee, right? But in the event that you do get into an accident, that insurance is going to kick in, and it's going to help you with replacing your car or getting a new one or whatever the case may be, right? So this is just very similar. I pay like a small amount every month, or if it's 30 days, it's every month. If it's 60-day put options, then it's every 2 months. But um, small amount, right? If nothing happens, if we don't, you know, start trending down, great. Then I'll just keep paying the small amount. But if the markets do crash or we have a recession or whatever, then I'll be covered, right? So that's the whole idea of it. Um, Now the main objectives for this system is to have simple but concentrated diversification, right? To take advantage of innovation and growth crypto, or I'm sorry, to take advantage of innovation and crypto growth opportunities, to produce long-term and steady passive income, to in hopes to cover my bills and expenses and liabilities, right? To have money set aside for taxes at the end of the year. And then last, and probably this is probably like the most important one, is to apply put options on my main holdings to minimize risk in bearish markets. So these are my main objectives, right? This video was just kind of like a quick overview of my system, and then obviously I plan on making more videos in the future, going more into detail. Um, but thanks, guys.